I didn't have access to banks. I didn't have any family in the real estate space. Didn't have any money. 3 years ago, I had $3,000. That was it.
He had 30 units by age 21. At age 22, he's at 108 apartment units plus 22 with the new resort. So if I do my math, I got 130 units with property values worth about 20 million.
Yeah, and 12 million in debt.
12 million in debt. Very impressive, quick path to gaining that much real estate. Hey guys, welcome back to the channel. I just wanted to show you this great presentation by very young Cody Davis that came to my alma mater, UT Chattanooga. He just did a wonderful talk to the real estate club here. Cody is from Union, Washington, and you mentioned you've skipped the college thing or dropped out of college. You were kind of intimidated here in front of these college students.
I'm really nervous.
And they're also intimidated by you, seeing what you've done at their same age. You're doing commercial buildings, which are more than 4 units.
Yeah.
You do seller finance deals. So the sellers are lending you the money to take their property and pay them payments.
Right.
It may be 100% if you're lucky, or at 90 or 80% or something like that.
Right.
So you've got to get the rest of the money by someone else.
Yep.
And then we talked a little bit, because I'm a single family home investor.
Yeah.
You're not going to find owners of a single family home that's going to give you an owner finance deal.
I mean, you can do portfolios of houses, but typically people that they own one house aren't going to do it.
You're not going to call up a guy on Google Maps, a regular family, to do this with their house.
And that's why I look at bigger roofs.
Yes.
More likely to be multifamily, more options.
If it's owned by an investor, they're significantly more likely to be willing to loan you some money.
Right.
They just are tired of this property, want to move up, move on, or like you said, build the relationships.
Yep.
Thank you for speaking. Look forward to watching your channel and to seeing your success, man.
Thank you. Appreciate it.
Thank you very much.
Well, I appreciate the warm invite. It's a little bit weird to be back at a school. For those who don't know, I got started just a few years ago, and college wasn't actually my route. And a lot of my friends thought I was going to come to say, oh, you shouldn't go to college. That is not what I'm here to say. My business partner got a business degree, and I'd be the least qualified person to tell you about it because I dropped out. However, fast forward, or let's go back just a few years, I got started. I went to a community college, was starting to learn about business. Super excited, I wanted to be a chiropractor. That didn't end up happening, but I decided to leave and got my real estate license, as any irrational 19-year-old would do. Thought that was a logical thing, and found someone online. And what I realized was most people, when they're trying to get into the space, focus just on, oh, I need to learn my numbers, or I need to find an excellent mentor. And when I left college, I was overwhelmed with a lot of information. There's a lot of info online, and they say, well, you need to learn about cap rates, or you need to learn about management, or you need to learn about LLCs. And it just comes down to simplicity. I got my real estate license, thought I was going to be super good at it, and 6 months later, made $0 and 0 cents. It was a little bit rough. After that 6 months, I ended up learning about this thing called seller financing. Raise hands, has anybody heard of that? That's for people that typically don't qualify with banks. And 19-year-old Cody didn't qualify with banks. To this day, I actually still have no bank loan, but over the last 3 years, I built a portfolio of 108 rental apartments and a resort. And the main thing that I had to learn through all that was simplicity mattered. If you can't keep it simple, it's not repeatable. And if it's not repeatable, then it's what we call getting lucky. And that's not something that I want to share with you guys. It's not about being lucky. It's about really just making everything easy to digest. And so when it comes to real estate, some people say the most important thing is the deal or the location. And I want to challenge that. The most important thing is learning how to play the game. It's not about finding some excellent flip. It's not about finding excellent mentor. It's about meeting with people, building relationships, and learning how did they play the game at the highest level. And so what I did, and what I encourage folks to take a look at, is stop trying to find a piece of real estate and go out there and actually learn how people play the game at the highest level. So anybody here have a mentor right now in the real estate space? Show of hands. Did you find that through relationships that you got? Well, all my relationships, all the mentors that I found have been through this map online, Google Maps. It's weird, but if you think about it, every property you want to buy is on Google Maps. Super simple, but it just comes down to the people that you want to learn from. If you want to go buy real estate, maybe you have your first rental, maybe you have a huge development company, maybe you've got a bunch of apartments. The people who know how to play the game at the highest level are the people that own in the market you want to own in. It's just that simple. You want to go learn how to play the apartment game, all you have to do is go meet with the people who own apartments. And so in the beginning, I had no mentors, and I just realized, okay, I don't know what to do, and I just got to figure out, how do I go to that Next level, let's go meet with the people that have played the game at another level. So in the beginning, make a phone call, find a 12-plex, and that 12-plex owner, they know how to buy 12s. I did not. Call them up, learn how they got to where they're at, and the most important thing I ever learned was you can learn anything you want to over a cup of coffee. It's not just about, oh, I need to go study these books. Are any huge book readers in here? Okay, me neither. Most people think that you have to learn everything from a book. You got to go in and you got to study, learn your terms, learn your terminology. That's not how it is. Information is one thing, but application's everything. And you learn the actual application from the connections that you build. It's not about knowing the most. I am usually not the most well-versed in the room. I'm also usually not the most confident when it comes to reaching out to people. A big introvert as a kid. And for those who may feel the same way, it's okay, but the main thing is if you can identify a goal and then build a small and just easy to follow path to get there, it becomes a lot more simple, a lot more repeatable. And so really just what I want to get out there to folks is if you just have a goal, let's say you want to get to 10 houses, you should probably go meet with people that have done that. Sorry, it's a little bit weird coming back. If you have your goal and you want to get to your 10 houses, the main thing that I want to share is if you want to get to 10, you need to go meet with people who've done that. If you want to go get to 100 apartments, you want to go get to 1,000, you want to do the storage game, you ought to go meet with people who have played that. And I didn't have access to banks. I didn't have any family in the real estate space. Didn't have any money. 3 years ago, I had $3,000. That was it.
If you enjoyed this video, it would really help the channel if you would click the like button.
And one deal at a time, I just had to identify, okay, how do I go to that next level? Well, when you find a deal, you have to find the debt. Because if you don't have a deal, you don't need to go get a loan. And as soon as you get the loan, you need to find the down payment. And if you don't have the money for the down payment, you can't buy the deal. And it just had to quantify that as, okay, find a deal, then find a debt, find the equity. And it was really just that simple. You find a property. If you love the property, whether it's a 10 unit, a house, or an apartment, once you set your goal, I want to buy this, I just need to go find the loan. And for those who heard about seller financing, it's just a promissory note. It's a promise to pay. It's an IOU. And when I was getting started, I didn't qualify for banks. I still barely qualify for the banks. I'm getting my first loan on Wednesday. But an IOU, it's a promise to pay. That comes from your trust with people. If they trust you, if you have a relationship with them, it's the reason I do the coffee meeting, then they'll give you terms that other people won't get. It's just a promise that says, I will pay you this over this amount of time. But it really just comes down to, I go meet with them and I have to establish trust. And that comes from getting a piece of info from someone, applying it, and letting them know that it worked. That's it. If that's all you get from this, if you can go build trust with people, you just get a piece of info, you apply it, let them know it worked, they'll give you opportunities no one else will give you. And whether you do it with the bank, whether you do it with the seller, if you can just prioritize figuring out how to build a business based on other people's best practices, other people's principles. If you're into books, Ray Dalio has a great book called Principles. But if you can learn how to play the game at the highest level from the people that have established their own principles, they've repeated it over and over, you can use that to build your model and make it better. If you can take the best pieces from people on both sides of the equation, you can use it to build your own strategy. Some people like to syndicate. If anybody's familiar with syndication, I'm not a huge fan, where you go crowdsource capital. However, there's great business models from that you can use to apply. If you like Dave Ramsey, or you like some big syndicator, you like just using cash, or you like using leverage. I'm a huge fan of leverage, but there's a point where that's a double-edged sword if you don't play it right. And so I was just talking with a couple folks before this. Build a huge debt monster. You basically go borrow a whole bunch of money that cash flows, pay it all off, and you can use the best strategies from both people's stories to build your own. It is quite simple. So I got my first deal, and that was a 12-plex. The 12-plex was actually on the market. It was zero money down, seller finance. And so I signed a piece of paper and ended up getting a 12-plex next to Microsoft that made about $10,000 a month. And some people say, well, that's a unicorn deal. That was on the market for 561 days. And if you just look on the MLS, you can find seller financing. A lot of them are selling now because banks are changing some of their terms. However, I just ended up looking on the market about 3 hours away from home. And it was in a little town called Quincy. For those of you who don't know about Quincy, I didn't either. I asked one of my mentors at the time, they're in the real estate group, the real estate brokerage I was at, and they're like, well, what the heck is a Quincy? I didn't know. So I had to do some research. I found a deal. It was on the market. It was a pretty cool building right next to Microsoft. And I had to then go find the debt. Well, it was listed with seller financing, and seller financing is just you sign a IOU and you back it with what's called a deed of trust, and you're set. And that deal, they ended up financing $1 million for some 19-year-old they never met. It was over the phone. It was listed. Ended up meeting with them. They didn't expect that I was going to be 19 years old, but they ended up financing $1 million. I needed $112,000 down. I was about $112,000 short. It was a little bit rough. But once you find the deal, if you can get the big piece put together, the debt, I found $1 million. The seller was willing to just write a note. You just got to find the little part. And in my head, I was like, okay, if I can get $1 million, probably going to be a little bit easier to get 100,000. It wasn't, but at least I did in the right order. Found an opportunity, then find the debt to line it up. And then that down payment ended up being, it came from the equivalent of a hard money shark. It was 12% interest, a lot of interest. It was like throwing it on a credit card. But I found a property, found the debt, and then I found the down payment, which just also happened to be debt. And with a signature, my hand was shaking probably as much as it is right now. When I signed for it, I got $800 a month net cash flow on an asset. And now I had a 12-plex. And if you want to go build relationships, you want to go scale up your org, when I got started, I had a 12-plex. Well, now that's a relatable point to other people that own real estate. And if you want to get in the room with people, the way to do that is through relatable points. Relatability gets you in the room. And relatability at its core is just your path. The things that you can relate with others on is the things that you've been through that matches with something they've been through. And once you get that in-person meeting, this is how I got my second 12-plex. Fast forward 9 months later, I called them up and said, hey, I have a 12-plex. Found them on Google Maps. By the way, everybody's phone number's on Google, so you don't have to ever pay for that. But I found their phone number, gave them a phone call, said, hey, I saw you own a 12-plex. I own a 12-plex in another town. Curious how you did this. Can we grab coffee? And ended up sitting in his truck. His truck had butt massagers, craziest experience I've ever lived, but ended up learning about how he played the game. And he got started with a 6-plex. He bought it seller financed, and so he started teaching me more about that. The relatable point of having done something that he had done before, it just happened to be the 12-plex in that case, is what got me in the room, but it was just that simple. Relatability got me there. Then I had to share my goals. Most people will book a meeting and then they'll try and keep relating. They'll try and keep saying, oh, I do this. I see you do this. I love fishing. You love fishing. That's not what you want to do. If you want to build a relationship with people, you have to now share your goals. The goals will get them to want to work with you. And if you just keep trying to share relatable point after relatable point, they'll say, great, thanks, have a nice day. They may share a little bit over coffee, but that's about as much as you'll get. I shared that I wanted to retire my mom. That was the biggest thing. And when I met with him, now I'm grateful that I'm able to do that. But I just said, I want to retire my mom. To do that, I figure I got to go get some more rentals. And so he ended up selling his 12-plex to me because the last piece of the game, you got relatable points, you got goals, but you got significant. The reason why you're doing what you're doing will determine if people buy into your story. And the story is worth more than the real estate. It always is. Always will be. Some people put the real estate as the forefront of everything, but the story that you share with people matters more than anything else, because it's what people will remember when you're gone. And so, yeah, the goal of retiring my mom is great, and it's a goal. They'll work with me on it, but the significance is, and if you think about this for yourself, when I do that, she doesn't have to worry about life anymore. She can finally experience something she's never done, and the person I was buying from didn't get to do that for his family. And so if you can use significance as just part of that to really build that connection with people, you can use that to leverage into building up your portfolio. He ended up then selling me another 6, another duplex. He helped me personally build the goal. He's helping me develop, and I can use that to go to the next person. So I did that, and I ended up buying a 38-plex. 38-plex, I never bought anything that big. I wanted to learn how they got to where they're at, learn how they played the game. I was in the space, I was in the real estate space, relatable point, but my goal was to go bigger, and they had done that. And their ability to help me get to my goal sooner, if you're thinking about it for yourself, if you can meet with people that resonate with your goal, resonate with your why, they will help push you a little bit further than those who just are there because they've done it. Like you just share your goal, great, but if you share the reason why you're doing what you're doing, oh, I want to retire X, or I want to be able to provide for my kid. I want to give them something that my parents couldn't give me. Whatever it is for you, if you could share that with people, it creates buy-in, and buy-in allows for that relationship to really get built. If I had to start today with nothing, I would go meet with owners. I would just pick a market, number one. I wouldn't care about all the metrics. Some people care about population growth. Some people care about income growth. I mean, that stuff matters. Numbers are numbers, but you got to start your story somewhere. And so I would just pick a place. I'd go meet with one owner a week. The real estate's irrelevant. Yeah, it's a real estate club. You want to go buy real estate. But there's so many ways to do it. And if your goal is $5,000 a month, $10,000 a month, 20, whatever the number is, it's really quite easy to get there. So I would set out your goal, but then I would just go meet with one person a week, even if they only own a duplex. I've met with people that own a fraction of the portfolio that I've got, but they've taught me more in just an hour than I could have ever asked for. And And so I would just keep going out trying to learn how to play the game a little bit differently, because it's the connections that you build, the little pieces, it's the last puzzle piece that puts it all together that will finally get it to click. And I wouldn't worry about all the stuff on the internet. There's more information online than anybody could ever ask for, and a lot of it's irrelevant. Like, yes, info is great, information's free, and you could pay to study it, just like you can pay to study business. My business partner's got a business degree, he went to college, he paid for it that way. You can pay for info, but the application, the actual stories people share with you is priceless. So if I had to start over, I'd go meet with people and learn how they got to where they're at. The story will always be worth more than the real estate. Yeah, so the Google Maps idea is, I just go on the aerial view and I find big roofs. It's all very simple, because if it's simple, it's repeatable. I find a big roof because it's more likely to be an apartment building if it's a big roof. And then I put the address on the tax assessor, find the owner. If it's an LLC, then I just type in the LLC on, there's a website called Open Corporates, and it'll tell you who owns it, and then figure out where they're based. If you plug in someone's name, the city they live in, and then phone number, you can find just about anybody's phone number, whether it's Elon Musk or Jordan Belfort, or any big name people that we would all know. You can find their phone number, and it's absolutely free. It's all public information. Some states are non-disclosure states, but you can still find the info. Once you actually find them, the call script is not, "I want to buy a property." Ever. I never say that. People aren't sellers, they're owners. That's just a vocabulary shift. Nobody's a seller, and so I call them up and recognize they've done something I've never done. They typically say that they're not gonna sell. It's like, I don't know how to even buy it, never done it before. Curious how you got to where you're at. And typically you're gonna have to share a relatable point. Well, I'm 22, getting into the game. I don't have any family in the business, or maybe you do, but I'm looking just for a coffee meeting. I wanna know how did you get started? That is the overall goal. I just want to figure out, how did you get to where you're at? Because I've never done. And what you've done is something that I've seen most people never get to, which is true. Yeah, so when I got started, I worked with a third-party management company, and then they stole all my security deposits and rent, which was a little bit painful. So in the beginning, I was doing basically all the work, and the third party was just managing the money. I wish that wasn't how it ended up being, but it is what it is. Today, I have a few employees, but in the beginning, I had to do everything. When it comes to outsourcing stuff now, I do all the financial intake, because I don't want what happened to me. Like, it's okay to make a mistake once, but don't make it again. I want to control the money, and I try and outsource the daily tasks of the apartment. It's really easy to become a plumber or an electrician. Not saying it's actually easy to do that, but it's easy to fall into that role as an apartment owner if you let it. And I started buying 3 hours away from where I grew up. And so in the beginning, I was going and doing everything. One of my real estate agents in the office that was above me said, "Cody, you're not a plumber, call somebody." And so I try and outsource as much of that work today as possible, but you can only outsource stuff to the extent that you cash flow. So as far as the money goes, that's me. And then as far as the actual day-to-day operation, I try and hire as much of that out. Yeah, so I try and keep everything separate. I don't like to commingle all the different properties, and so I try and keep everything independent of each other. And it's not just because of asset protection, but I just like to keep everything on its own slate, its own financial statement. I'm a firm believer that if you're going to build a business or you're going to build a portfolio, you should have all your properties stand on their own. You shouldn't have to have one feed the other, because cash flow is everything. If you don't have cash flow, meaning you have positive income every month, your company will die. It is the blood of all business. And so I try and keep everything separate, so I have to do good deals, and I can't let the deals of the past float everything in the current. It's a really good way to go bust. Yeah, as far as indicators go, I only have 2 qualifying criteria to buy stuff. Some people have these big spreadsheets. I don't. How do I buy it? How do I never lose it? That's the only thing I care about. If I can figure out how to buy it, it's great. I can go buy a whole bunch of real estate really quickly. That's just deal, debt, equity. You find a deal, you find the debt, and you find the down payment. Well, it's cool to buy stuff, it's less cool to lose it. And so the second question is, how do you never lose it? And that just comes down to long-term fixed rate debt and cash flow. And those are the only things I really care about. If I can figure out how to buy it, I find the opportunity, then I find the debt, then I find the money down if I need it. Buy a whole bunch of stuff, that's the first part of the equation. And then the second thing that I'm looking at as far as metrics is fixed rate debt, a long-term balloon, meaning I don't have money that's due tomorrow. It's going to pay itself off over time like a home loan, meaning it's amortized and then it cash flows. Some people buy negative cash flow because they can get great appreciation. I had an old mentor do that, and he bought a whole bunch of real estate, made millions in equity growth, and he lost it. His money came due, he didn't cash flow. It doesn't matter how much money you make on appreciation if you can't hold the asset. And so it comes down to cash flow. As far as the tax benefits go, there are some great tax benefits with leverage. You can get tax write-offs with real estate, whether you pay cash or whether you put 10% down, 5% down. If you put 5% down though and you get the same amount of tax benefits, it really starts to multiply your returns. You get the same write-offs for a lot less money. I'd say building a business that could take care of my mom. That's the big one. But in the beginning, getting the 12plex was a big deal. But it really comes down to just getting the first one. The first one for me made it possible. And on a personal level, getting the first deal for me was great. But I ended up meeting with a 18-year-old. He's now 19. He repeated it. I just met him for the first time a few months ago, but met him online about a year ago, and he bought 28 apartments, 2 10plexes, an 8plex, seller finance, 0 money down, and that allowed him to move out of his parents. I'd say I'm most proud of being able to help him out, but I'm very grateful that I was able to build a business that could take care of my mom. So that's like the overarching significant reason why I do what I do. And so being able to build the business to allow to do that probably. So the original goal, the end goal, was to get to 100 apartments. That was a 2-year goal. My business partner, Christian, I met about a year and a half ago, and we set out this mission to go get 100 apartments in 2 years. We did it it was a little under 11 months, and we didn't know that it was going to go as quickly. I met him. He went through college, so he's helped me out a lot with the business side of things. But we said, let's go get 100 apartments and then pay it off. And when we got to 100 apartments, we did it a little bit in half the time we thought it was going to take. We realized, okay, we can pay this off in 5 years. Then what? Well, our goal is to then keep building the portfolio. I've had a lot of family pass from different illnesses. I don't know if anybody's familiar with ALS. There's ALS, cancer, and issues like that. And so what I want to do is build a portfolio to $10 billion, pay it off, and then donate some of the properties, organizations, and foundations that continue to donate to those causes forever. But that's the next level. Like once you hit a level of self-sufficiency, then you can focus on what's actually next, what's it all for. And after a certain point, there's no amount of anybody's life. And it doesn't take that long to get there in real estate. So that's what's, yeah. So in the beginning, I heard a lesson from one of my real estate agents. He said the quickest way to become a millionaire is to borrow $1 million and let someone else pay it off. And I thought it was a joke, but he was being serious. If you can borrow money for stuff that'll pay for itself, then you're set. We talk about high leverage. A lot of people lose their butts when they lever to the hilt. And traditionally, that's because of where the banking products are at. But with the creative finance side, you can write your debt where it cash flows, even at high leverage, and you can make it all non-recourse. So there's recourse debt, there's non-recourse debt. Recourse means the lender can come after you in excess of the property that you got, collateralizing it. Non-recourse means they come after the property, and that's it. So with the seller notes, the seller finance debt, I make everything non-recourse. So that property is independent of everything else. If it goes wrong, the other stuff's fine. And I write the interest rate where it cash flows. Cash on cash return, for those who like math. A lot of people think that's a really important metric. I don't. I look at debt coverage. So if I got $10,000 in debt payments, I want $20,000 in net income, so I can pay my mortgage twice over, so that if I have a fallback, I'm still going to be okay. So for every $10,000 of debt that I could take on in actual payment, I'll make sure that my net income is at least $20,000. I want it to be at least double. And your loan to value, if you talk about 100% LTV, I'll just give an example. If someone offered $1 million property to you for $2 million, it'd be a bad. If they financed it to you, and this is just a gross example, but if they financed it to you 0 money down on a 50-year balloon, like 50-year loan, and it cash flowed $4,000 a month, I would argue that it's quite a good deal. So your loan to value, your leverage point only matters when your balloon comes due, when the loan is up and you have to get new debt or pay it off. That's when your LTV matters. And if you just focus on LTV, you'll buy less deals. And so I focus on how do I improve my cash flow on long-term debt. And then when it comes to paying it off, I'm not just trying to pay it off little by little every month. I'm just going to stack liquidity so that I can write a check for the mortgage. I want to keep the risk on the lender as long as physically possible. And then at the very last minute, when I have a bunch of money in a side account, write a check so that the risk is gone. I don't want to hold debt forever. I don't want to hold high loan to values. However, if I have cash flow, long-term debt, and liquidity, it's very hard to go bankrupt. Yeah, I work with Appfolio for the actual property management, and that logs all the incomes and outflows for expenses. And I've since hired a CPA. In the beginning, a lot of people are really focused on that though, and I encourage folks to go out and build the model before they try and track everything. Like the LLCs are important and accounting is important, but until you have something to put in an LLC or anything to account for, it's important to just focus on the actual growth and going out meeting with people and buy an asset. But I work with Appfolio and I've used QuickBooks. Is that it? We're good? I use Google Maps just because it's an aerial view, it gives me a picture in my mind. I mean, I said earlier, the story is worth more than the real estate. I have to be able to tell myself a story if I want to pursue something, and so I like to be able to see it. I'm not just doing Google Maps for like the US, but just once I find a location, I find a city, I want to hone in and see, okay, these are the neighborhoods, these are the properties in that neighborhood, and I'm just going to start calling everybody in that area to learn how they got to where they're at, learn how they actually built the portfolio for 4 hours. So it all started 3 hours away, about in a little place called Quincy. Then I branched out one town over to a place called Moses Lake, which is basically dead center of Washington, and that was the second place I invested in. And then had a deal pop up from a video I put online saying we were doing seller financing. Someone actually reached out and told us how they played the game, and they seller financed a place just outside Seattle, a little 7-plex, and that was seller finance, 4.5% down, 3% interest. And then shortly after that, a resort popped up. That was the most recent purchase that I've done with my business partner, Christian, but that ended up actually being listed on the MLS, and that was in the 4th place we ever bought. That's not a city, that's a town, but that's in Union, Washington on the Hood Canal. It'd be nice to have something local, but you got to buy the biggest deal in the best location you can in the beginning. You don't really, I didn't have the luxury of just saying I want to buy where I live, so I had to find the opportunity. That's what I recommend people, whether you're 3 hours away, 12 hours away, an hour away, or it's in your backyard, you got to get started. I just started 3 hours away, and I actually live at the Hood Canal resort property now, house hacking. If you can reduce your housing expenses, it's a good way to get ahead. But when that popped up, seller finance, I ended up just moving. I didn't. I'm buying properties that are rented. I don't flip and I don't sell. I think selling is a poor business choice, and you're going to pay fees when you sell, and you're going to wish you didn't in 20 years. So I just try and buy stuff that I can figure out how to hold forever. And so it's all built off of cash flow. And so I'm not buying vacant buildings. I'm not buying huge rental projects right away. I just build a cash flow machine so that you can do the other stuff. You can make a lot of money on rental projects, but just because it makes money doesn't mean it makes sense. So they're going to do it because they want to help you out. I mean, people try and sell, but people try and sell on the tax benefits or why people should do it. That's not why folks are going to do it. They want to help the next generation out. And the next generation, I'm not just talking about young people. Like, youth is time in business, not time in, like, on planet Earth. And so if you can just connect with people on the fact that, hey, you've done something I've never done. Nobody's doing this right now, but if you can just say, hey, you've done something I've never done, curious how you did it. Like, the youth in the business is what gets people to want to do it. They want to help people that are asking, but nobody's asked at all. Like, nobody is going out there saying, I've never done this, how did you do it? Typically their kids don't want to do it, and they don't want to just give a property that the kids have to manage, and they don't want to just give a whole bunch of money in a bank account because kids are typically going to blow that. So they can also give them note payments as just an incentive, but they're going to do it because they want to help you out. That is the reason people seller finance today. More often than not it does, but the main thing is I'm just trying to figure out how do I contact them. And some numbers will be dud, how it goes. But yeah, as simple as possible. It starts with an introduction. Hey, I'm Cody. So you had a 12-plex on Marina Drive. Oh, I'm not selling. I don't know how I'd buy it. In the beginning, I was using my age. Now I don't, because I realized it wasn't important. I used to think it was, and I realized it wasn't. But it's like, hey, I'm getting started on my career. I saw you at a 12-plex. Never done that before. How'd you get started? Well, I'm not selling. I don't know how I'd buy it. Like, they typically say that twice because they're so thrown off. Like, most people never make this phone call, and even more people never get the phone call. So if you actually get through to them and just make it clear, I don't know how I would do this. That's the reason I'm calling you. I don't know anybody who's ever done a 12-plex. How'd you get started with this? Well, I started with a 6-plex, and then I bought a couple duplexes, and then I bought this 12-plex seller finance. That's awesome. And so I'm just going to keep pushing forward, and you have a starting point and an end point. And my end point is trying to get a coffee. Like, I appreciate you sharing this with me. Could we meet up over coffee? I just want to learn a little bit more. And more often than not, they'll say yes. Yeah, so the best things that have ever come out of my life have been through the relationships I built, and some of the worst things have also come out of that as well. My very first mentor stole over $500,000 from me, and that's very real. And so it's not all sunshine and rainbows. Stuff happens, but the intentions behind why you do what you do, they will level out. And so I've had a lot of bad things happen, but those had to happen to get to where I'm at. And so when you're getting started, some of the pitfalls you may have is you're going to get overwhelmed with info. People are going to say you have to do a whole bunch of stuff. Things don't always go as you think they're going to go. Even today with the presentation, didn't go how I thought it was going to go. However, I keep pushing forward. And in the real estate space, not everything goes well. Sometimes you blow the conversation, sometimes you blow the meeting, sometimes they laugh at you. It happens. However, when you're building the business, you're not supposed to know how it's going to work. Otherwise, you would have already done it. And so whether it goes well, whether it doesn't go well, if you go into everything you have, like every meeting you have, with an objective, and you come out of it with a takeaway, it keeps you, and when you're intentional, you grow. And so I learned from the loss with my first mentor Learned from when the property management company stole from me. I drove 3 hours for a meeting, and then he canceled on me 10 minutes before the meeting, and I'd drive back, and it's like, okay, what was the takeaway? Probably could have just done it over. But you waste time, you waste money, resources, but if your goal is big enough and the reason why you're doing is significant enough for what you're doing, it'll be okay. Whether you have huge loss. That was the only thing in the beginning. Yeah, that was it. I grew up in a single household, and my dad did fine financially, but I want to be able to help my mom. That was the thing. If there was one thing, that was it. And as far as that, everything else is fine. I could lose 90% of the real estate and still be able to take care of her. And so I built a portfolio that hit the why. As far as what's next, I want to help other people out. I want to be able to build something that goes to the foundation to take care of folks. But if you just hone in on one reason that's driving you, like that for folks here, regardless of what it is, if there's one thing, even if it's just you don't want to worry about working a job, if you have one thing that matters the most, keep it in your mind and stay intentional every day. But that is it. That was typically you don't. That's the hard part about having no money. But would you rather have real estate with problems or have no real estate? You get to pick your problem. A lot of people are going to opt to not have the real estate. My goal is let's create something that I have to figure out. Because if you solve problems, you make money, and what you do with it, it's up to you. But I ended up creating a bunch of problems. I had water heaters go out, and it ate through a year of cash. In the beginning, that is what it is, but I can't let my tenants not have hot water. So you figure out a way to get through it, or you don't. It'll go well or it won't. In the beginning, it is scary. When I was signing for my first loan, I became $1.1 million in debt. Terrifying. And then I had a $6,000 a month mortgage. That was also equally terrifying. Never done that before. I didn't make any money. I was still that real estate agent that wasn't selling it. However, I did have a new problem. I had to make sure that I took care of the people that stayed in my apartment complex so they'd be willing to pay. And this was through COVID. So, it was a little bit scary, but I just chose to have that problem instead of not having the real estate so that I could figure it out. Because if I figured it out, then I'd be in a better place than I was. And if I didn't figure it out, then I'd be back where I was. No, Washington is about as bad as it gets. Yeah, Oregon's worse, but Washington's a very difficult place to be a business owner in. That's not a reason not to do it though. There's going to be a lot of challenges, and I've had properties where a whole bunch of people don't pay. When I first bought the 38 plex, that was my fourth deal ever, first one I did with my business partner. 38 units, for those of you who know cap rate, it was a negative cap rate. It lost money if you owned it outright. It was a painful adventure. It was negative cash flow of $15,000 a month. It was very, very, that was because of vacancy, that was because of non-pays. It was very difficult to get them out. However, what I did was I knocked on everybody's door. This was when I was doing all the management. I didn't outsource, saying, hey, what do you want fixed? Even for the people that weren't paying, what do you want fixed? Oh, I want new appliances. And some things got thrown on a credit card. No, I just said, here, I'll do it. Yep. But you can do this with tenants, you can do it with property owners, you can do it with business owners, but the intention behind everything you do matters. It's not always going to play out. I haven't had everything work. I've had some still aren't paying, and I can't kick them out, and they're behind, $15,000, $20,000 in rent. It's painful. You still got to pay the bills either way. However, I'm going to put my best foot forward regardless, because they don't deserve to be living in crappy situations. If they need a new fridge, I'm going to get them a new fridge. And out of that, a lot of people ended up starting to pay. At the end of the day, the way you operate a good business is some people get so far behind they think it's impossible to catch up. And so sometimes if they can make a payment, I'll settle, just say, hey, pay $5,000, I'll settle the rest. They're typically not blowing the money, they're just sitting on it in the bank because they think they don't have to pay. I don't want to put people on the street. Some people are like, oh, I'm just going to evict you. I've got people that are like that. And in this business, it's a people business. If you're a good human, it'll come back around. So in that situation, I'll say, hey, look, you're behind 20. If you can pay 5, then I'll wipe the rest, because I just want to get you caught up. I don't want you to think you're in a ditch. Some people are like that, but for folks who operate their business like money is the end goal, that's the only thing that matters, you're going to struggle. And so if you can get beyond that, I'll just say, hey, look, let's settle, or let's go get housing authority to pitch in, or let's just move you out somewhere else. Start a clean slate. The money's gone, but it's already. Treat them nicely, regardless of how they treat you. If you can help out, if they're amenable, do it. And if not, ask them to leave. And if they don't, then one day it has to go through eviction, but nobody wants to do that. No, not right away. The first property, I didn't raise rents for 2 years, and I buy deals that make sense day one, so I don't have to raise rent. And I don't try and raise rent unless I actually do something. I'm not going in and saying, okay, your rent's double. I actually have to go invest into the asset to get something out of it. Some people go and say, I'm just raising below market. Well, that's just not a good face. It's not a good look. And if you do that over and over, eventually people don't want to rent. I only do apartment. I look at it as if you can buy a house with a roof, I'd rather have a couple doors underneath it. The roof is going to go bad at some point, so I might as well have some more income to go behind it. You can buy deals that make money. You can buy a lot of houses that make people that have owned hundreds of homes, rented them out, made a lot of money every month. But at the end of the day, just because it makes money doesn't mean it makes sense. I don't want to build a business model off just houses, because as soon as it's vacant, I still got a roof to service. I've got all the appliances, all the utilities for that are set up. They're their own cost that someday I'll have to write a check for, and now no one's paying for it. With apartments, typically you can get more apartments, you can get a 10-plex for the same amount of money out of pocket as you can get a house. But it comes back to the deal. You find the asset, then you just have to find the debt for it, and then the money down. So you can do it with a house, you can do it with 10-plex, but if you want to buy 10 houses, you should buy 10 houses. You shouldn't just go buy it. It's up to your personal goals. Favorite deal I ever bought was the resort. The resort, ended up buying it, zero money out of pocket, and bought it for $4.5 million. I'm the broke boy on the block for that one. My property neighbors are the Nordstrom, Jeff Rake, who Microsoft guy, then Bill Gates. So they're all the property neighbors. They're a little bit nicer than some of the apartments, but that one's fun because it's a piece of history. It was built by the set designer who partnered with Walt Disney way back when for the Robin Hood movie in 1934. And so they built this the same year to remember that. Yeah, it's like a hotel. Yeah, so there's 7 employees that live on site. They've got their own space. And if you're not familiar with it, there's a work camper model where people will live for free on site and exchange hours of work. So they get basically a discounted stay. They get to live in a nice place and they get paid to turn the cabins. So I've got 7 people that help turn the cabins, and then there's 23 other cabin spaces for the residents. That's the Robin Hood Village Resort. I made a mistake. I trusted the owner implicitly, and we built a relationship, and then not everything seemed to be truthful at the end. There was a whole bunch of cracked septic lines. Everything was smushed from trees, and that was all underground. And he said he snaked it, and he showed me a report. I don't know that it was accurate, but you win some, you lose some with trust. And so looking back on it, I would have done it on my own. Trust but verify. I didn't do it on that, but that was the one with the septic issues that we had to get remediated within the first month. Yeah, so got 14, and the very first one I ever hired, talk about building a relationship, I gave him 10% of the resort. So I try and give people opportunities. If you can give opportunities to people that believe in you in the beginning. I told her when I hired her I couldn't afford what she was worth. She's done huge 100+ unit high-rise apartment buildings. If you can't afford to pay people what they're worth in the beginning, you have to give them an opportunity. And so I said, I appreciate you being on the team. If you can help out, I'll figure out a way to make this right. And so when the resort popped up, we gave her 10% of it, just because she believed in us, being myself and my business partner Christian, when she could have worked somewhere else. So I try and reward that and help folks who are on them get into real estate, because at the end of the day, I want people that if you're building a business, it's good to align the compensation model with the outcome of the business. And if you can say, hey, look, when we make this work, we'll do X. So I try and help people in the property management company go buy real estate so that the real estate helps build the property management company and they build their own portfolio. If you can align all the incentives together, people are more inclined to stay around. Yeah, the way that we run our business is 50-50. The LLCs are 50-50. And the reason that we do that, some people say, oh, one person should always have the upper hand. We don't believe that, because we're not giving it 50-50, we're giving it 100% on both sides all the time. And it's not an equal partnership. We know that going in. People who think it's going to be equal are just they're off base. And so we're just giving it 100%. We're splitting everything 50-50, even if it's not fair at certain points. He's going to be doing more work than I am on certain things. Yeah, and we're going to give 100%, even if his 100% or mine is higher at that point in the business. There's going to be different points of the business cycle where one person's more productive than another. And it's just how it is. When I got started 3 years ago, granted I met him a year and a half ago, I did a lot more legwork than he's done in the companies even to date. But a lot of his stuff today is harder than what I had to do in the beginning. It's not difficult to go out and build relationships and buy real estate, but I had to do a lot of that in the beginning because I didn't know what I was doing. I didn't have a solid mentor. I had to go find them from the Google Maps route. And today he's doing a lot of the systems, a lot of the tax filing, figuring out how we structure up our corporation. Technically more difficult than what I did, like on a lot of levels. And so we're both giving it 100% all the time, but there's different points in that cycle where his is going to be more difficult than mine and vice versa. Okay, well, that's it. I appreciate nice crowd considering my performance. So thank you.
Thank you for speaking. Look forward to watching your channel and to seeing your success, man.
Thank you. Appreciate it.
Thank you very much.
If you enjoyed this video, it would really help the channel if you would click the like button. I hope you have a great week, and I'll see you next time. Oh, and by the way, although I'm a licensed CPA and I have 3 business degrees, I'm just a guy on YouTube, so be sure to contact your professionals before making any investment decisions. Thank you so much, and I'll see you next week. Feel free to put any question you have in any video in the comments, and I'll be happy to do what I can to try to answer you guys. Thanks for watching the video. Appreciate your support. Hope you have a great week. We'll see you next time.
Make sure to check out the rest of Jeremy's channel. It's helped us a ton. Go check it out. There's a lot of great stuff in there.
IdentityGuard.com is now offering my subscribers a 33% discount on their services. See the link in the show notes below.